Hey everybody, today I just wanted to do a market overview and I also wanted to talk about some of the news that's going on here. A few days ago, we had this potential talk of easing the blockade of Ukraine's ports along the Black Sea if sanctions on Moscow are lifted. Without the Black Sea ports open, officials in Ukraine are estimating that only about half of the already reduced harvest will get out of the country. Just to drop some facts, right now the world is focused on a global food crisis, and the Russia Ukraine war play a big role in that. So, Russia and Ukraine account for about one third of the global wheat exports, and Russia and Belarus are the world's second and third largest suppliers of fertilizer. Ukraine is responsible for 10% of global wheat exports, 14% of the world's corn exports, and about 50% of sunflower oil. So together, Russia and Ukraine provide about 75% of the world's sunflower oil. This also happens to be a common ingredient in baby formula, which we are having a shortage here in the United States. So there is a potential that embargoes on Moscow and Belarus fertilizer exports could be dropped. Last week when I was really paying attention to all this news, I did see that that was a very potential bullish catalyst. Just seeing some of these embargoes get dropped because that could definitely help in our food inflation here in the U.S. The problem that we kind of have to face right now is, do we let these third world countries who are hurt the most by these food shortages suffer, or do we continue to press Russia and see an end to the war? Maybe in the future we could see potentially more talks about this, just dropping some of these trade bans and lifting some of these sanctions just to help alleviate this global food crisis. Now, in China, the zero tolerance is still very much in play, as President Xi stated on a video on May 18th. What makes this a bit interesting is that you have companies like Apple that are actually wanting to boost production outside of China. So this could further hinder the Chinese economy. So it makes perfect sense for these large companies to cut back their reliance on Chinese production, just given all of these rolling lockdowns that have been happening. Now, here in the US, the Atlanta Fed Bostic reported this Monday that they could see a case for pausing rate increases in September. But on the other hand of that, Bullard wants about zero point 0.5 rate hikes each Fed meeting and wants 3.5% interest rate by the end of the year. We do have clarity. So this is kind of like the what we do know. We do have clarity that zero point 0.5 rate hikes for June and July are likely going to be the case. So no surprises there. And for the Fed minutes, they did slightly raise projections for inflation due to constraints, higher projections for import prices, and potential wage increases pushing up prices of services more than previously assumed. Now, if we're just going to talk about the earnings front here real quick, Walmart in their earnings call said things like consumers are trading down full gallons of milk to half gallons and choosing off brand versus name brand. Consumers are also focusing on groceries and household essentials over discretionary items. Now, Ross CEO mentioned higher fuel and food prices are leaving consumers to be squeezed. Another important piece of news that dropped was the quarter on quarter GDP. That's this information right here, this page that I have right here. From what we saw, it shrunk 1.5% from the annual rate versus the estimates of 1.3%. What we are seeing now are a fall from record trade deficits. So consumers are buying more foreign goods, and personal savings rates are dropping from 5.6% from 7.9% from the previous quarter. Another thing that I do want to note is new home sales. So we got this information here on May 24th, and we can see significant decline in the actual home sales. So here in April, we saw 763,000. Now we're seeing 591,000. And I could just pull up some more information. So here we can see, numbers were pretty decent. So they're always above 600,000. And finally, now we're breaking the 600,000 threshold and we're going down to 591,000. So we've definitely seen mortgage rates increase, and this has been definitely been slowing down the real estate market. So I know that in my neighborhood, I'm seeing homes that are up for sale, and they've been up for sale for quite a bit. A few months back, these things would sell right away. So that's already a sign right there in my own neighborhood. So now that we got all the economic news out of the way, let's go right into the technicals. So I'm going to start with Apple. So the one thing I do want to note about Apple is that we had this downtrend support line, and then we bounced off that. We had these two trend channels. So we had this initial trend channel, which actually turned into a more steep trend channel, and we were selling off at a faster rate. So what happened in this week's price action was we broke the smaller trend channel right here, as you can see, from this large candle right here. And then we broke this larger trend channel, as you can see from this candle right here. So now we are above the 20-day moving average, which is at 148.36. And one thing I do want to note is we have the 50-day right here and the 200-day right here. So we could potentially see a death cross on Apple, possibly in the coming weeks. So I will say that where I do see Apple significant resistance is probably going to be right here from these lows that we made on February. So that's going to be right around 152. And if we do somehow make it above that, then I would say resistance could also show up right here at around 156.83, which is this previous high right here. And then if we do get to it, we could essentially make a break all the way to the 200-day moving average. So the thing with these rallies, these bear rallies, it's really hard to tell where exactly we're going to go. So, we could just fade as soon as the start of June or the last day of May on Tuesday. So a lot could happen there. And with QQQ, I do want to say that we are in this broad downtrend channel, but more recently we've been in this shorter downtrend channel, which we broke out of, as you can see. We also made, we also passed this previous high. So that is a good sign right there. Now, where I do see significant resistance is going to be right around here. And it could also potentially show up right here from that February low area. So we could see potential resistance right here at 318. Or we could potentially make a break to the 50-day moving average, which also kind of lines up with this last previous high, which is right at around 430. So this previous high was around 430. The 50-day moving average is right around 428.51. So those are very strong potential areas of resistance. Now let's say we do break above that and we just skyrocket. Well, I think what does happen is that we could just hit this top trend line right here, which is the top of this trend channel. And then we could just essentially make a lower high just based off these two previous highs. Now with S&P 500, very similar situation. So we do have this high right here, this old high. So this was right around 430. And then we did break above February's lows. So this does look like a bullish indication right here. So I do think that it could be very likely that we try to make a break to this 50-day moving average right here at around 426.42. So again, that previous high was right around 429, right around 429, 430-ish. So if we can break above that, then we could eliminate that double top scenario and could possibly go back to the 200-day if we get above this 50-day moving average. So the situation is looking a little bit more bullish on the price action, but overall I still do think that this is just a bear market rally. So do be cautious. If you need a hedge, go ahead and hedge. Do whatever you can. So now moving on to IWM. So we did break above this resistance right here and this resistance right there. So if I take out the moving averages, we can see that we had this resistance trend line, and then we broke past that. And it was also another resistance trend line right here. And you can see that they both intersected right here. So a break past that does look pretty bullish. We do start seeing resistance right around here, and quite possibly here, the February lows. So we're basically right at this February lows area. So if we can break above this here on IWM, I do think we just make it to this prior top. Now looking at the moving averages, the 50-day moving average is at 192.21. So that is where we're probably going to see very significant resistance. We could possibly break through that intraday and try to make like a double top right here. So we'll see. XLF. Now XLF, this is the financial sector. So the area that I am looking at resistance is definitely going to be right here, which is this prior high. So this prior high was right around $36. And we have a 50-day moving average right here at 36.24. So we could see resistance right around this 36 area. So definitely watch out for that. And then you know what? I'm just going to throw in the VIX right here. So now let's look at the VIX. So the VIX actually closed a little bit under the 50-day moving average at 25.89. So you know, if the VIX does continue to sell off here, then I do think that we could go all the way to the 200-day moving average right here at 22.56. Now, when I was looking at the S&P 500, it does look like it wants to go up a little bit higher, just on the technicals alone. But, you know, there is one thing I do want to talk about. We are going into a long weekend. So the stock market is actually closed on Monday. So it's going to be interesting to see how next week plays out, just because, you know, people are on long vacation. So we could see low volume in the stock market. So it is very possible that we could just see like a low volume melt up on the indices, and we could start seeing VIX just fade all the way to this 200-day moving average. Now when VIX does get to this 200-day moving average, I think that's where you really got to be a little bit more cautious, just because if we think about every single month, there's going to be a lot more economic data that kind of happens near the beginning of the month, because that's where we're so focused on CPI. So we do see a lot of this fear just from what the inflation reading is going to be. So I do think that generally the first half of the month is going to be a little bit more bearish than the latter half of the month. Now that's just my opinion. Of course, it could be wrong. But I do also want to talk about earnings. So when earnings does come right around, let's see, it should be around July, the end of July. I do think things are going to get a lot more shaky, just because the tenor of the earnings from the last quarter were basically that this next quarter coming up is going to look pretty darn weak. So what I'm kind of thinking is that we could see weak numbers, but we could possibly see better guidance. So that's one thing I am kind of looking at. But I do think going into earnings in July, we are going to see a lot of panic. So maybe that's when we could start seeing panic hit the markets again. And maybe right now we're just seeing this short relief, and who knows, we could see some sideways actions for a little bit. And then once we start getting like the bank earnings, the mega cap earnings, that's when fear settles in. So I hope you guys enjoyed this video, and I'll definitely try to make more like these around the end of the week, you know, after I'm done with work, and then we hit a Saturday, everybody's off. So hope you guys enjoyed this kind of video, and I'll definitely bring more of these in the future. So have a great day.